Hello everybody, welcome back to another valuation investing video, and today I'm going to be analyzing Nike stock. Just a few weeks ago, Nike had some big news. Nike CEO John Donahoe stepped down and replaced by Elliott Hill as the new CEO. Also, tomorrow, October 1st, Nike has earnings. Nike is expected to report 53 cents in earnings and $11.65 billion in revenue. Today, I'm going to be deciding whether or not Nike is a buy today, using my 7-step stock analysis, and then at the end of the video doing the most important thing, valuing the stock and seeing if it is worth a buy. The first metric I like to look at is the trailing PE ratio. I want the trailing PE ratio to be greater than 0. As we can see, Nike right here has a trailing PE ratio of about 24, so that is a check mark and shows that Nike is profitable. The next metric I like to look at is forward PE ratio. We want the forward PE ratio to be less than 30. The forward PE ratio is analyst expectations of price divided by earnings in the future. As we can see here, Nike has a less than 30 forward PE ratio, which we want. Nike's forward PE ratio is barely under 30, but nonetheless, it is a check mark at 29.24. Now I like to look at Nike's revenue growth. We want the revenue to be growing at a greater than 5% rate. As we can see in this chart, Nike has been growing above that rate at about a 10% rate, which is very good for the business and shows that sales are still continuing to grow. Then I like to look at the EPS growth, which is the earnings per share, so basically the net income of the company. I like to see also a greater than 5% rate of growth. As we can see here for Nike, it is about a 15% rate of growth over time, which is also another check mark. Another metric that I like to look at is the debt to equity ratio. I want the debt to equity ratio to be less than 1 on companies. As we can see with Nike, it has a 0.83 or an 83% total debt to equity ratio. This helps shows that Nike has less debt than their equity, and also proves that it is very unlikely for Nike to go bankrupt, which is another check for Nike. The second to last metric that I like to look at is the shares outstanding. I want the shares outstanding to decrease over time. If shares outstanding decrease and the company buys back the shares, that means us investors will own more of the company. Even if us as investors don't buy any more shares, we will still own more of the company. As we can see with Nike, they have been reducing their shares at about a 3% rate. All we want is a company to have their shares decreasing, but having buybacks at about 3% is very good for us as investors. So that is also another check for Nike. And the final metric that I like to look at is the analyst expectations for earnings per share. I want this to be also greater than 5%, showing that in the future Nike is likely to grow at a decent rate, which will also correlate to the stock price in the future. As we can see here, over the next 5 years, Nike is expected to grow at about a 5.35% rate, which is slightly greater than 5%, meaning that is a check mark. So we have all 7 metrics check marks. So far, this looks very good for Nike fundamentally. Before the last and most important step of valuing Nike stock, if you guys can please hit the subscribe button and press the like button. The goal is to hit 500 subscribers by the end of next month. Now let's get back into valuing Nike stock. To value a company, we have to predict what the future holds for a company. So we have to use an educated guess to determine whether or not Nike is a buy today. So first prediction we are going to make is the revenue per share growth. The first prediction we are going to make is the revenue per share growth over the next 10 years. Analysts expected about a 5.4% growth rate, so I'm going to put about a 5%. The next prediction we have to make is the net profit margin in the next 10 years. I'm going to put a net profit margin for Nike at about 11%. As we can see, Nike's profit margin on average has been pretty consistent. Then for the cash conversion, we can leave at 100%. Then we go to the terminal PE ratio, and I'm going to leave the terminal PE ratio at 20. I don't believe Nike deserves much of a premium to the market. The market normally trades at about a 15 to 20 PE ratio, and I think Nike is going to be slowing in growth and not deserve as much of a premium. So I'm going to leave it at 20. Finally, I'm going to use a discount rate of 15% to ensure a greater margin of safety. As we can see with our calculator, we get an average fair value price for Nike at $53. If you bought Nike today, you would make about an 8% return, which isn't too bad. However, I like to have a greater margin of safety in case our predictions are wrong. So guys, thank you for watching this video. See ya.